What's up, everybody? Welcome to Traders Retreat. Got another video here for you. We're going to go over the expected move for the week. First, I want to show you guys why this is so important and how how effective it was this past week, especially with the range that we saw. So we're just going to do a little replay here. The blue represents cash open, and the red represents the 4 p.m. candle, which is cash close, basically, right? So obviously cash open halfway in between this the candle that pops up where the blue vertical line is. This is the expected move, first deviation to the upside, right? This is the bottom of the range, first deviation to the downside. This blue area here is hourly demand, and you know what? For now, what I'll do is I'll turn off these. These are my regular zones, and these I've had for a long time on this chart. We call them the OG zones, and they work like a charm. But anyways, not the point of this video, although you'll see how effective they are in conjunction. So this gray line here is Friday's close, which is what you base your standard deviations off of, right? So your expected move is a plus minus, right? So plus minus, I forget what it was. This week was 64.69. So again, you took 4027.6, added 64.69 to it, and I believe we come up with something in that range. Let's see. So, yeah, somewhere up in there. So, top end would be, 4090.81. So, I have 0.8, right. So, yeah, 64.67, you guys. And again, to get your lower range, you just subtract that number, right? So, 4027.6 minus that 64.67. So, I have them labeled. Let's take a look and see what happens here. And you can see right off the bat on Monday we came down, but we bounced, right? We held it on a closing hour. This is all overnight. Now we open Tuesday. We get underneath it, not surprising, right? But what do? We bounce off hourly demand. Here we are Wednesday. Boom! And we'll talk about that. We held that, right? Very nice. You could tell we were holding it. Here we are into Thursday. Didn't do much. And we all know Friday jobs reports came out, dropped, and we trended up. Closing where? Closing inside of this expected move to the upside. I'll tell you right off the bat here, folks, if Powell had not been speaking, we would have sold off further. This hourly demand would have broken, in my opinion. We went straight down on Monday, straight down to the expected move, the first deviation down. We did bounce, right? Obviously, we dipped through this, so on a 5-minute, you need to be careful, right? But on an hourly closing basis, normally, if we get an hourly close, outside of this range, it normally means that we're going to see some more continuation outside of the range, right? So it doesn't matter if it's up or down. Just what we're looking for is price is expected to stay inside of these two lines by Friday's close, right? So it's based off of the last Friday's, and then by the next Friday's close, which was right here, it was expected to stay inside this range. So this week, market makers won. Okay. I mean, they're still pushing it pretty tight, but they did their job. They did well. So, anyways, we bounced here. Once we got this hourly close at open, I remember telling the group on Zoom, I think it was, that it looked bearish. We did get another out. The next hour closed bullish right here, but then obviously we opened here, dropped right down, bounced off this hourly demand. These are key, of course, and we go into these in detail. If you're not sure what I'm talking about here, I'll put a video at the end of this video. I'll put another video up that goes into how we build our supply and demand zones. And again, this is on the 1 hour. So, you could see it here. This is perfect. We got back down underneath. Okay, once you make that move underneath, this is going to act as resistance instead of support like it was here. And I will get into this is the first video just showing you guys how this works and how effective it was, especially this last week. This is not uncommon though, right? We see that it's effective, and it doesn't have to just be on SPX. It's across any equity that has a weekly options chain, right? That's where we get it from the implied volatility. So and then the next video will be how we find them, and you can put them on your charts. And I'll probably do a third video just diving into kind of some of the details, the back end of it. There are some formulas, although they're not ever, I haven't found one yet that's perfect, that matches up what we find on Thinkorswim. But at the end of the day, there's a couple indicators that we can talk about, and I'll put all that in the third video. But I wanted to show you guys just how effective this was, because if you didn't know these levels were here, 3961.4, 4090.8, much less this hourly demand, right, which we teach in our group constantly. The thing is, you would have been at a loss, right? This was expected. It was a very predictable week. I say that, but at the same time, I didn't know that Powell was going to pop off like this. But the move was so big that the shorts that I had built up, I cut them. I forget exactly where, but I cut them. Took a loss and then made 4x back actually by the end of the day. 4x what my loss was. Now I still have my long term. I have the only puts that I cut were the intraday puts. So I still have my puts for December. And I have my VIX calls going for January and March, right? I have Tesla puts going for, I have a couple in December and then January as well for 150. So I'm definitely still bearish. And real fast, I'll just say the reason for that is because we did not break above the expected move, which happens to be in a daily supply zone and this trend line. You can see this red trend line kind of skating in, right? This is a lower one down here heading up. This is that all-time highs, from all-time highs, coming down. We didn't get above it. So as bullish as this was a nice push up. The fact that it held here really doesn't tell us that much, in my opinion, right? This is just playing with us. This is Powell coming out saying, "Oh no, everything's fine, buddy. Everything's great, man." And don't pay attention to what I did in the last meeting where I about soiled my pants while you guys were telling me the market was rallying. So anyways, that's the deal with this. Pay attention to these expected moves. Keep your eyes open, obviously, for the next video. It'll be coming out shortly, hopefully today, on how to put these on your charts, because you want to do this stuff. You want to get the numbers, and you want to get them on your charts, obviously, before the week starts. Because prime example right here, Monday, right? We open up, boom, right down to it. You couldn't. That's a move. It wasn't the biggest expected move, but it doesn't matter, right? If you don't know these levels are here, you're gonna get chopped up, and you're gonna just miss opportunities, in my opinion. So, I will say this in the Discord. All the links are below, you guys. But in the Discord, we have a channel where we post all the expected moves for a majority of tickers, like 25, 30 tickers. Including all the everything that everybody trades. We have that popped out each week, so that's one of the benefits of joining the Discord. We do have them on, so because you have to get these numbers before the market opens on Monday. So, and preferably for some of the the indices, it's better to get the numbers before futures open, right? Even though technically it isn't affected. But anyways, that's enough on this. Burn this into your mind, right? This was beautiful trading. Even if you didn't trade the Powell deal, right? This was great. We came right down where you're taking profits right before you hit this. Maybe you missed out on a few points, but this is a great short. Once we closed underneath, got that pop up. This is a great short, right down to hourly demand. Predictable, right? We opened here, nice short down to here, held. Obviously this explosion, like I said, I cut them. Got into the call side, like basically flipped, was able to make back all that money. In this chop here, we came right up to, looks like we're going to make that breakout, and what happens? We get the close, the hourly close, right at the expected move, right? When I get this 9 o'clock candle closing, right, at 9:59, right at the expected move, that next pop, as soon as it starts to go weak, I'm short, right? Because I already know, like this thing, if we're going to get the bullish signal, it should have closed up here, right? Up and over it, and it didn't, so we came down hard. Bounced here, just kind of in no man's land. There's some some smaller time frame stuff here, but and that's the other thing. Let me show you real quick, because this is the OG zones. This is the stuff that I tell everybody to have on their charts, even if you have your trading done. The thing is, these zones work like magic, right? And you can see that. A pair of them makes a zone, and again, these are not off any specific candle. These are things that I look back over time. I've had these specific zones on the chart for, I'd say, easily most of the summer, right? All fall at least. Maybe I redid them in the end of summer. But, and to have them, have it do this, right? We pop up above and then we just kind of hold it as support, trying to dip down. This is a clean, you got that jobs report came down, bounced, came back and closed that 9 o'clock candle there, or that 8 o'clock candle, sorry, at 9 a.m. right here inside the zone. Obviously, this pushed up from here, and it was a great day for everybody. So, all right, guys, take care. Keep your eyes open for the next videos. Please like, share, and subscribe this. Retweet it. Check out our other socials. They're going to all be in the description below. We are on TikTok. We're on Instagram. Obviously, we're on Twitter. Maybe coming to Facebook soon. Just trying to get out there, obviously. And if you're interested in the Discord, the link to the WAP site, which is who we use, wap.com, that is down there as well. So check us out. Thanks for watching.